Hey guys, Nifty is down about 400 points, almost 395, and Bank Nifty on the other hand, so don't ask at all, again down 700 points today. And just to take a mental note, in the last just 5 trading session, Bank Nifty has fallen 1,700 points. That's a huge fall in the market. And in today's video, we are going to look at 4 to 5 major key important things why market is falling in this manner. So first off, obviously, as you can see right in front of me itself, I have the chart, and I have also in my yesterday's video I have mentioned why this is a bearish sign and what would happen if as you can see, market fell below this particular support zone. And today, as you can see, this is on a 5 minutes time frame, guys. This is a pure price action in play over here. We had a support zone that is basically yesterday's low. Basically, we could have drawn a resistance zone from yesterday's low, and then today, as soon as market opened gap down with a huge gap down, which I'll get to in just 2 minutes, why market is so bearish fundamentally. But technically speaking, as soon as market opened gap down and then goes back up, hits the resistance, comes down, right? A pure price action. This is something that every technical trader or technical analyst out there dreams of, and I've been mentioning it again and again and again. When Nifty comes to this level, then is a real game, right? Then it will give great opportunity to traders like you and me, to take some better, a very high probability trade, and that's what we have seen in Nifty today. So next off, Bank Nifty, of course, it has already been in a bearish territory. I've mentioned it multiple times, and today also the bearish trend continued. But again, when an index goes this down in such a small amount of time, 1,700 points in just 5 days, so you have to be careful. So I was focusing more on Nifty, like I had mentioned in yesterday's video as well, because there it gives me better odds because it's near that support zone. It could either break it or take support. So clearly, it gave a breakdown today and a very beautiful structure. But even in Bank Nifty also, if I just zoom in, right, this is a daily chart. Just notice the fall right after it crossed that support zone. This is the horizontal, and there was one more trend line on a weekly time frame as well below both. And now, as you can see, a very clean fall. This is such a directional market that a price action trader needs, right? Even if I go to 5 minutes, again you'll notice the same thing, same pattern in Nifty that we saw here. It basically went up and touched the previous day low and then took resistance from there and came down. So again, I'm just getting too hyped about how perfect today's market was, as for any price action or technical trader out there. But now let's get back to the real news here. Why is market falling so much? Well, the main data that made the whole fundamental, the economical negative news is the US jobs growth. Basically, it comes as a bit of a surprise because apparently unemployment rate has slipped to 4.1%. So clearly, even though it might look like a good data, in December they have added about 256,000 jobs compared to the market expectations. Apparently this is a bit low. Again, fundamentally, yes, if the unemployment rate goes down, inflation should also go down. It's everybody is getting job, that means more companies are hiring. It's a good thing, but not as per the expectation. It always happens, right? Even though it may seem like a good news from the outside, sometimes the news will be bad, and that's what we have seen in the US job growth data. Then next off, we have another same news that is again related to the US market. Basically, they have something called as US Treasury Yield, like even we have in India, RBI bonds and etc. All these government bonds. So just like that, they have a 10-year bond that is issued by US Treasury, and even that is hitting new low. That is a 20-year low for the first time. Apparently, it says that the country's benchmark closed at 6.8% against the US Treasury yield of 4.7%, taking the spread between the two for about 200 basis points. So clearly there is a lot of news coming in from US, which is sort of fueling all this volatility in the market. And on top of that, we have FPIs. FPI basically stands for foreign portfolio investors, and these people are also on a huge selling spree. They have sold for about 22,000 crore in January. Man, January hasn't even started yet. This is what it hasn't been. It's like 13th of the month, and they have already sold 22,000. And notice how it says the FPI, not FII. At the end of every day, you'll get a data called as FII DII, that is foreign institutional investors who come and trade, but these are portfolio investors. These are people who put money in equity stocks. These are the people who directly invest in Indian stocks, and they are taking out a huge chunk of huge chunk of their money from India, and this is clearly not a good thing. And this explains why both technical and fundamental come together, and that's what we have seen in the last 4 to 5 days, and especially today in Nifty. This is such a great. I mean, from a technical standpoint, I just love the data, how everything is transpired. But again, not a good thing overall. Clearly a bearish thing. But again, I'm sure Indian markets will rebound, right? And then next off we have the oil market, and I'll actually get back to how both US is responsible. I mean, whatever happens is affecting India through whatever they do, be it oil. For example, see, oil runs the world, right? So if the oil price goes up, everything else goes up. Your food price will go up. Let's say I'm getting some clothes or maybe buying a phone that is being transferred from a vehicle which is run by oil. So oil price matters. And if oil price goes up, and why is it going up? Because US is sanctioning all the countries like Russia and China, the countries that they don't like because of Trump. So clearly, whenever they're sanctioning a country, this will affect other countries like India, for example, and now it's affecting our market as well. And not only that, it also affects the oil related companies, IOC, HPCL, BPCL, all down today, all down about 6, 4, 5% today, because oil price is going up. Again, it's a bad thing for these companies. So clearly, and it's bad thing for the overall market as well. So this is what is driving. There's so many negative news in the market, which, and on top of that, we have a very technical, clear indication. So it's just one top of one bad news after another. And next off, of course, another bad news is the rupee. So rupee is basically, we have UNR ISD. So clearly, there also Indian rupee is sitting on all-time low. It has gone up to 86.50. Again, guys, if it goes up doesn't mean it's good for India, right? That means India's purchasing power will come down. So now for every dollar we have to give 86.50 rupees. So clearly, if it is lower, it's better. If this goes back to 90, again it's bad for India, because we have to pay more of our money to get $1 of that. Right? That's how it works. And now clearly, this is what matters, and this is also another major news, and this is being affected by the FII selling that will create, it's a ripple effect, and all of them are so interconnected, it's just dragging the market down. So I hope you guys have a better clarity on why the entire overall market is actually so bearish.
If you're a trader following market calls and tips for day trading, use our tool RNT, Research and Trade. All you have to do is link RNT to your trading account, then just sit and relax. Turn trading into business at app.gwcindia.live. Check out description for more details.
Disclaimer: investments in the securities market are subject to market risks. Read all the related documents carefully before investing.